it's actually coming back up again because of tariffs, right? So these tariffs mimic a tax on consumption, which obviously hurts demand because the more expensive things are, the less likely people are to buy things, right? And so that's going to force potentially an action by the central banks if inflation starts to creep up above that 3% range. Instead of the interest rate cuts we were expecting in 2025, we might actually have the potential for an interest rate hike. And that is very different than the message that we had last year, right? Canada is very heavily trade dependent. We are exporting nation. Approximately 30% of our GDP comes from exporting goods. And so when U.S.-China tensions flare, Canadian exporters often get caught in the crossfire, especially think of things like energy, as you mentioned, Steve, agricultural and manufacturing. So the Bank of Canada has to sort of look at these external price shocks and domestic demand when setting rates. And I would say domestic demand still remains high, but the price shocks for exporting that's going to cause something.